September 20th, 2024. Happy Friday. Talk really quick about the market, some names I'm looking at, go from there. Take a look at the S&P. S&P futures were actually down a little bit overnight, recouping some of the morning losses here. We'll see where we open. But some consolidation here I think would be welcome, especially the move we've had the last couple of weeks. We have not much in the way of data besides the September jobs report, which will come in 2 weeks. Then earnings season will kick off on October 11th with the banks. So in between that time, we have kind of not much in the way of cattle. So I don't know if that bodes well for more upside, but we're kind of in a blue sky breakout area. So if we churn here, then maybe we start looking to 575, 580 on a SPY. And certainly always looking at geopolitical situation in the Middle East. It always seems like there's headlines there. I mean, it seems like every conflict that has happened over the last couple of years has been the possible catalyst for a worldwide recession or World War III, and then the markets just continue to go higher, Ukraine and all that stuff. So we'll see how this all plays out. But areas I'm watching, the upper Bollinger Band on the SPY 571.30 it is now. So watching that as resistance if we do find some bids today. If not, then on the flip side, 568 and then 563 on the SPY. And then look at the small caps. Right near the highs we hit back in the middle of July. Hit its upper Bollinger Band, which the IWM 224 is the upper Bollinger Band. It hit 224 and change, and then closed at 224.58. It's pretty much right at the highs. So yesterday the small caps closed pretty much right at the highs, where the S&P has a doji candle kind of in between the highs and the lows of the session. So kind of two different closes. Obviously, if you've heard my rants for a while, you know my thoughts on hoping that the small caps can finally start to outperform. Nice little slide, and I don't know where I pulled it from, but it's from I think Bank of America. It's like a statistic showing, and I think I posted in the chat room. If not, I'll do it right now. It's showing a statistic of how small caps perform on the first rate cut going back to like 1974. So 6 months preceding the rate cut, they underperform, and then in returns in regards to the large caps, and then that proceeding the next 6 months they outperform. So pretty much is how things have played out, and we'd love to see the small caps really start to take off. All right. So that's enough of my broken record on small caps. So let me just talk about some of the individual names. First, I'll just talk about Visa, MasterCard. I did a lot of that rant yesterday afternoon. Walmart reports out that they're going to start to allow just direct from your bank on the website. I'm sure that at some point it's going to be like that stone rolling downhill. Like some of the issues with transactions, you need clearing, right? You can't just say I'm going to take money from your bank account, not have the process to clear, and that's I don't want to go too much into it because I don't have too much time, but I just think at some point there's going to be some event that's going to just finally be, I wouldn't say the nail in the coffin for party processors, but where finally that's like the turning of the tide, right? The shifting of the tide. Anyway, I added some of those inexpensive Visa spec puts. Sure enough, it bounced at 283. Well, not much I could do there, but I was actually looking for next week, so don't be surprised if I get some puts into next week or even further out on Visa or MasterCard, just to play for two reasons. One, the premise of, hey, at some point the market's going to start pricing in the competitive concerns in the transaction space, and also if there's some kind of market pullback. And I said on the rant yesterday afternoon, at some point we're going to wake up and the market future is going to be down 1%, and we're going to say what news, what was there, a news, or and there won't be any news or cows. It'll just be folks taking profits, and then it becomes that snowball effect. So I'm not saying the markets aren't going to rally from here, but I'm just always open to scenarios, and one of those scenarios, it's happened so many times over the years where overnight there's something maybe and Jens Japan is having their central bank meeting, and suppose they're going to raise rates again. Is that going to cause another issue on Monday? You just don't know. So anyway, so that's that. So that's a Visa, MasterCard, maybe down to 465 or so. You start looking at its 50-day moving average. It's had a monster move since August. And that's that. All right, so individual. Well, actually, let me first talk about VKTX. So VKTX, Viking Therapeutics. I will add October strikes today. Sure enough, what's it doing at the open here? It looks like it's going to gap. It's over $70. NVO reported some positive phase 2 data. There's also a nice piece in the Wall Street Journal this morning. I wouldn't call it a race to the bottom, but there's it's like a pricing war between Zepbound and Govy and all the other drugs. And there's also reports out the European Union's going to allow GLP-1 drugs to approval for weight loss with for heart conditions for obese folks. And it's this is like the storm coming for GLP-1 drugs. I wouldn't say the storm, maybe it's the a good storm, right? That at some point when GLP-1 drugs are approved by insurers in the US for weight loss, like I mean that'll be this maybe the start of the next leg for some of these names. So you would construe dropping prices on these drugs from MVO and LOI as net negative, but really all it's doing is at some point it's going to start to get some of these insurance to say, okay, we're going to insure weight loss drugs, and once that happens, that'll be the next leg for some of these names. So anyway, needless to say, over the weekend, I don't want to have some buyout, and same with VKTX. At some point, there's going to be M&A in the space, so I will get October strikes at the open. I was looking at October 90s. Those might be up 50 or 100% at the open, so I don't want to. I'm not going to say I'm 100% getting those October 90s, but maybe a higher strike depending on what those look like. Uh, TERN looked great all the way up to 1070, and then once it hit that 1070 wall, just boom, went right back down and was out actually under $10 for a little bit before closing at what did it close at 10? Did it close at 10? 1004. So barely. I'm probably now I'm gonna wait till 1070 because that looks like a key wall. And TERN has had these moves where it just sells off for no reason. It'll be down 7% one day, up 12% the next day. So that 1070, I just don't want to be in a spot where I hold the calls or get the calls when it's holding 10, it gets up to 1070 and falls again. So I want to see that break first. That's TERN. And then yesterday was frustrating for some of the names, or most of the names I'm in on the call side. Take a line all the way up to 260 for most of the day, and then found some late pressure, closed at 257. Still like that one for a move to 270 plus in the coming days and weeks, but it's going to have to start moving for my October premiums. Redfin disappointing despite Zillow rallying, and in the face of lower rates, you would think it bode well for Redfin. And does this mean some of the move that it's had in August, since August, or most of the move is already baking in all these possible tailwinds? I hope not. I still think it could trade over $20 in the coming months, but I'll wait for 15 to hold or stick before I add more strikes there. Roku, you look at the chart, it looks great, but unfortunately, it was all the way up near $80 at the open, and it gave back all the gains to close pretty much flat. Still like that one for over $80 into next week. Not going to add anything here just yet. And then Clear closed at multi-year highs yesterday. It was only up 1%. Of course, disappointing for me because I would love to see it over that 34 handle. But for now, I'll just wait and sit on my hands to add some more strikes. But I'll probably just hold my Octobers right now on Clear Secure. I'm trying to think of some of the other things going on. Oh, triple witching today. Did I already talk about triple witching? So supposedly, I say supposedly because there's no 100% math to this, but there's $5.1 trillion worth of options expiring. So you got index, future, and single stock options expiring all today. Uh, Typically, when you have triple witching, there's volatility at the end of the day. So it's pretty much the notional value. So if your call expires, it's the amount of this. So let's say I have a $10 stock and it goes over and you have a million, I'm trying to do the best analogy but needless to say, it's the notional value of the options. So it doesn't mean there's $5.1 trillion of the options. It's 5.1 trillion if those of the value of the options on the underlying stock, if that makes any sense. So it's similar when I talk about VKTX and it has let's say $70 calls and it has $1,000 open interest. That 1,000 open interest doesn't mean the contract could be worth $1, which would mean what, $10,000 worth of contracts open in value, but the notional value is how much each contract is 100 shares, and then 100 shares times the stock price, the $70 stock price. So then you start doing the math, and now it's a $700,000 notional value of the 1,000 contracts. So if that makes any sense, hopefully try to talk a little bit in layman terms. So everybody throws out that big number. It's really not $5.1 trillion worth of, or is it billion? No, it's trillion, right? Billion, trillion these days. Anyway, all right. So I think that's enough of my rant. I'll be back on audio later. Let's have a great day. There's about 24 minutes to the open. Rock and roll.